Speaking of Buffett, is Berkshire a bank? It owns some bank stocks, but is it a bank? I mean, it has Dairy Queen, Justin Boots, an entire railroad, and the pampered chef mixed in. Well, Vermont Senator Bernie Sanders says throw it in with the biggest banks and then chop them all up. We're looking at banks and Berkshire at this hour. They all happen to be up. No fear factor here after the Vermont senator introduced a bill just hours ago that would require the breakup of any company that has a total exposure of greater than 3% of GDP. That would encompass Goldman Sachs and Wells Fargo, JP Morgan, and oh yes, with a market cap of $240 billion. I think it's $340 billion, not sure, but that would include Buffett's gigantic conglomerate, Berkshire Hathaway. Our next guest ran with some of the biggest names of the financial world, and having served as chairman and CEO of UBS Americas, he's the guy to talk to. He's also been named 100 most powerful people in finance, Robert Wolf. Bernie Sanders is, what is it? $540 billion market cap for Berkshire Hathaway.
I think he's calling it too big to fail, too big to exist.
Right. Now, his premise, let me just state it here, is that if they're too big to fail, meaning if these companies somehow got into trouble, they could not unwind safely without taking the whole system down with them unless the government got involved, and that means the taxpayer. So he says break them up before that happens. Speaking from a taxpayer standpoint, I don't want to have to pay for these guys' mistakes in the future. What do you think of Bernie's bill?
Yeah, well, I was there 10 years ago at Lehman, during the Lehman crisis, so exactly about 10 years ago. And we did not have the tools then in financial services. Today we have the financial services tool, whether it's a resolution authority winding down. And I can go through it, but that would be for another time. I'm not supportive of this. It seems to me 3% is an abstract number. So what if GDP's at 30 trillion? Does that mean we're at 900 billion? It just doesn't seem that logical to me. And it also doesn't talk about the safety and soundness of the banks themselves. JP Morgan and Goldman Sachs, they're a better company today than they were a decade ago.
Bernie Sanders says they're all an average of 80% bigger than just before the financial crisis.
But it's not about size. It's about soundness and risk. They're less levered today. Okay. They have more underpinning equity. They're not in the proprietary space anymore. They're more diversified.
They're required to keep more dry powder, so to speak, on their books.
Listen, when I ran UBS, we were a $2.3 trillion balance sheet, 55 times levered. When we went into the Lehman weekend, Lehman was 35 times levered. Mm-hmm. Today, banks are under 15 times levered, and they have a real underpinning equity. It's not just goodwill. What the Fed did to these systemically important institutions was make them more safe, more sound. And I think if you're going to say banks, why not other companies that we couldn't actually dissolve?
But he did. He said... Berkshire Hathaway, I believe.
Well, I think I just heard you said that Apple was $1 trillion company.
Yes,
so are they going to break up Apple too because we can't do without? You know, I just think it is too arbitrary. I do think we have to figure out too big to fail, and the way to figure that out is to understand. Okay, from how do we wind down these companies? We tried it with a living will. Where I agree with Bernie is we don't know how to wind down a systemically monstrous institution that's globally interconnected. That being said, I don't think we should put some arbitrary numbers on it.
Chances of it getting passed or moving
through?
Zero. Zero.
Yeah, it's not getting passed. It's a very, in my opinion, very populist bill. Listen, it definitely goes to his base, right? It fits his base. I'm not in the financial services space, on Wall Street anymore. It's not what we do. That being said, if I was, I'd still say that the only group we're more popular than is actually Congress itself.
Okay. You are investing, though, in Bitcoin, because the last time you were here, you talked about it. You took a bet on it.
Yeah.
Right now, the banks, it would seem to me, are perhaps maybe some of them whispering in the SEC's ear saying, don't let Bitcoin get too powerful or big, or at least any of these cryptocurrencies. Yeah. It's almost as if their air hose is getting stepped on, and they're concerned that there may be a new way to actually store your money versus a bank.
Yeah, there's no question that I believe cryptocurrencies is going to be a real asset class.
Are the banks threatened?
I don't think they're threatened because actually they're starting to dabble. Morgan Stanley talked about getting involved. J.P. Morgan spoke recently about getting involved.
Setting up a trading desk is not necessarily getting involved. It's taking either side of the trade.
It's the beginning of getting involved, right? If you want to ignore an asset class, don't get involved.
Okay.
If you think that it's, you're too nervous to touch it, stay out of it.
What'd you buy Bitcoin at? I forget. It's at 6,423.
You know what? I think I told you. To me, it's an asset class. So I've been buying Bitcoin and Ethereum like on a monthly basis as part of. So I bought it some at higher level, some at lower. I think the highest I bought it was at like 7,600.
Okay.
And I think I bought it as low as X. I think I'm down about on the crypto portfolio about 15%.
So you're Bitcoin cost averaging.
Exactly. Well, I think it's part of an asset class. Tell me in 10 years, I'll let you know.
Okay. A long-term holder. Great
Correct.
to see you. Thank you very much.
Thank you so much, always.